Hi guys, today we will discuss Bitcoin US dollar pair and I will show you how on weekly chart it really showed you how to easily make money. So much easy. Yes, there are risks involved, but the point is whenever it tells you to get out, then the fall is usually extreme and you believe yourself that okay, this is a good plan. Why? Because it helps you get out early and get into the stock early as well. And once it makes you money, that's exceptional money. Now, let me show you one more thing. As you can see, the price rose up, then it was an engulfing bearish candle. And this was 730, next day it opens higher at 871. From 871, it went down to 408. That's what? Approximately 100% fall or 50% fall. That's huge. From 871 is the open. The high is 1003. So you can see that you as an investor knew on this day, on this week, that it's not going up. Wait, but it did touch $1,000.30. $1,030. So people were buying it without knowing the dangers, and it fell off, and it went to $408. So that's a 60% fall as well from $1,000. That's huge. Then again, the price rose up, and it's a buy signal. Let me put the buy signal right here. Now you would have bought at $904. Now let's see what happens next. It goes down and down, but just remember what I told you. First of all, your stop loss on this low. And if you just look at this red candle, its close is below this open. So basically all these candles are eating it up, and that's a sell signal. Now that's a loss making trade. Yes, it is. But the concept is wait. Now it's again saying buying, so buy. And the point is to look for the quarterly or the yearly results. Now just remember, hedge fund companies, what do you think? They don't lose money. They do. But the point is they know that their plan is so good that at the end of the year, at the end of the quarter, they will be making money. And that's why we all invest in hedge funds, because we know they make good money. How did they make that? They make through plans. Example, Candlestick. Now we have bought it. This open is 621. This open is 571.50 and this is 566. So it's lower. Not a good day. Sell. Now right here you would have sold it. And if you look at it, this is a morning star pattern. Wait, it went lower. And now it's again buy. But my concept, the first concept that I want to show you is right here we sold at 710. The low here is 425. Huge fall. 40-50% fall. Then again, we sold here at 566. The low 325. Again 50-60% fall. Huge. But did you lose that money? No. You were out and enjoying the fall. And once it rose back up, you bought again. Here you bought it at 621. Here you are buying it at 512. Huge. Your buying rate is getting reduced. Now, next, it makes 3 candles, 1 white, and boom up. So, no problem at all. And you'll wait, it goes up. Now, that's an engulfing bearish candle. Not a good sign. Get out. So you got out here. You bought it at 512. You got out at 571. That's a 15% income. Good. Then it makes 3 green candles. Red, red, red. Not a good sign. Wait. Huge long tailed doji candle. Now this is a low. If I just zoom out, this number 400 is the lowest point right here on this chart. So it tells us that there is some good news coming, but we will wait for that good news. We won't jump now. And if you look at it, it did fell off. But it's now at the same low right here. The close is same approximately. It's $1, $2 up and down, but that doesn't matter. It falls further down. And now it's like kind of a buying thing. So you will buy it out. Or we can wait it out. So we waited and we bought it again here. Now you might ask, why the hell did we wait it? Number one reason, it never ate it up. This candle was not eating it up. Although this is a bullish pattern. This is a bullish piercing line pattern. But there is a problem. It hasn't eaten it up. And the next candle is a small green candle. Again, not a good one. And that candle is not eating the second candle. So it's telling you that there is not complete force in it. There is a weakness. But right here we have bought it at 360 and just look at it further. It rises up. Now this open is 385.90. This closes 388.20. So right here I told you it didn't cross it, so it was weaker, but right here it's not that weak. It's good. So we are in it. Now this closes 360.60. This is 360, so it's higher. And now it's again sell. So we will sell it. But as you remember, this is again the box trading. The top box is this high. And this lowest box is this low. You'll wait. Fall. But if you look at it again, what do you see? You see you sold it at 352 and it went down to 209. Huge fall. But you were not in that fall. You saved those money to buy it again at 257. Here you bought it at 360. So $100 saved in the buying price. And it moves up again. But the second time it again makes a engulfing bearish candle. So you get out again. Now the method that I'm showing you is from the era where the Bitcoin was in a fall. If you check out the monthly chapter, the lecture before this lecture, you will find that on the monthly level it's in a fall. It's in a fall. But we on the weekly level are reducing your price by not falling into the trap. The price goes lower and we are not falling into the trap. Now right here it has eaten this red candle, so we will be buying it again. Right here. 232. What happens next? Boom! It rises up. It's a sell signal right here, but we made money. Easy money. That's the point. Money is so easy in cryptocurrency through candlestick chart. It did fell off to make a huge low of 170. But wait. It's now again going straight. So it tells you it's not that bad. But wait. It jumps up, up and up. 364. And if you will just move a bit out, you will see that those green candles were telling us to buy. You would have bought it here at 239 and boom, $500 as the highest point. It falls off and again it's a buy here, 358. Buying it here at 358 and the next thing you see, it rises up. Again it's a sell, so get out. And if you remember the previous lectures, this looks to be a double top. Remember, there is something wrong. And this is a third top, not a good sign. But if it makes a fourth top, then it will rise up. So, on this buy signal, we will buy because this green candle is eating these three candles. Now, this kind of a method, although I have not discussed this pattern in this course, but right now I'm telling you, this is what I call three method sudden bullish pattern. Now, it tells you that there are like three small candles. So someone was selling, but there was no major buyer in it to eat them up. But right here, on the fourth day, someone comes up and like buys in dozens. He buys everything and closes by eating all these three small candles. So showing that it's extremely bullish. Now here you might say, okay, that's a bearish channel. But if you look at it, I have a dotted line made right here. This open is not eaten by this red candle. Although this is a morning star pattern, but don't worry, wait. Boom, it goes up, up, and up. Now that's a sell signal because its close has eaten its open, so it's a sell signal. Right here, 440. Now where we bought it? 393. Again a good return. Boom, it's a buy signal. Buy it. Don't leave it aside. That's a good bullish signal. Wait, it runs up, up, and now it's again sell. So you can see that on the weekly chart, you're again making good money. Easy money. Now we have sell and we are waiting. The price again goes straight but falls off with a gap. And if you remember, I always tell you it fills the gap. So buy it here on the buy signal without any fear. It moves up. It achieves like eating part of the gap. And as it has achieved, so this is our like cue to get out. So the point is you make easy money and wait for the next move in. And you again buy it. And boom, it's going up, up, up. No problems at all. Where did we bought it? 614. And now it touched $1,160. And now it's sell 815. Now you might say, oh God, I should have sold it at the top. But for that, you need to trade on the daily level, not on the weekly level. Weekly level is something that takes care of the major risk. That doesn't let you trade more, but helps you make good profit. Now if I just zoom out, you can see that on the monthly scale it was falling, so we were also falling. But candlestick chart was helping us lower our rates each and every time. And then right here, once like the rate was lower, we are starting to make good money, easy money without any risk. See, it again is a big engulfing bullish candle. Buy. But I know you know that there is a risk of the double top. But wait. Wait. Boom, it has crossed the high. Now you're again in the money. It tells you to sell, so get out. Now the thing to note is the previous low. Once it made such an exceptional move down and came back up, that was also a dangerous sign. You would have known on this channel that there is something wrong. It's making too much like extreme shadow. That's not a good sign. That's never a good sign on a bull run. On a bull run, your lows should be keep on getting higher. But if it is not, then it's also like through experience you will learn to just jump out on this day. Why? Because you bought it here at 924 This close is 1172 with an exceptionally bad low, so you will get out. Why risk your profits once you're making an exceptional return and it's making like this? And you can always enter the next day if it makes an engulfing bullish candle like this. So why take the risk? Once you know, it will always call you in the money train. The call will be broadcast on your charts. The easiest way to make money is candlestick charts. Next, what do you see? You see a fall and a small green candle, two candles, three, four, and here it's crossing the high, so you could buy it. Now, if you look at it, I missed the initial buy. Yes, I did, but I usually try to miss them out. Right here, it closed above this open, so on this day, on this close, we should have bought it. But somehow I missed it, so let's see what happens next. It moves higher, higher. Makes 2600 high. Boom, it crosses that. And this is again what I call this kind of a candle. So I would suggest you to get out right on this close. Why risk it? And wait for the next day. And here it is. It's telling you to buy again. Buy it. So the concept is, it's making you money each and every time. Just look at it. Where did we started on the low? 238. This is what? $2,500. And that's what? This is June. And May. This is also June. Within 1 year, you made 10 times return. And the point is not 10 times return. Money is easy in candlestick. Either it's anywhere it is. The concept is, it helps you to have an idea what is happening in the market. It helps you to get out early. Yes, you will lose some of the profits in getting in and getting out. But the point is, your risk is reduced. And with reduced risk, it's easier to make money. No one can stop you. The best part, it's easy money. Now let's zoom in to check further. It's buy, boom, it's sell. So you get out. And as we discussed, your stop loss should be on the low of this green candle. It goes lower, boom, it goes higher. Now this is what I call manipulation. This is a complete manipulation. And who does it? Usually the people with money. If I want to buy 1 million shares and I'm trading on the let's say monthly level, then a weak fall like this doesn't cost me anything. I'll be making that fall so that people panic and I'll buy from them. But if you're trading weekly, then you have to bear with it. This is the normal term. You cannot do anything with it. If you want to get rid of it, trade a higher level. Otherwise, this is as it is. Now it's again a buy. This green candle close is crossing this open. So buy. Boom. What do you see next? It rises even higher and tells you to get out at an easy point right here. So if you look at it, all our buy sell signals are so easy. Nothing extraordinary. No problematic trades. Easy money to be made. And what do you see? We see 5,720 now. That's a good point. But the best point is, we have no risk involved. We know the market will tell us to get out. We don't need to hear the news. We don't need to hear tips from brokers or anyone else. We have our own tip generating machine. Candlestick chart. It's in it for 300 years and it's still working. And I'm showing you cryptocurrency. Who would have believed in 1700 that there will be a time that there will be a cryptocurrency named Bitcoin? But candlestick chart works on Bitcoin as well. Just look at it in front of you. It works. It makes exceptional money. Easy money. How? just by following the patterns. This course has explained you each and every corner of trading in candlestick charts. And it's not something of a rocket science. It's so easy. If you sell and it rose up, you would have bought it again. Now, usually, if I'm extremely bullish on anything, I would place a automatic buy order above this high point. So just like stop loss, there is a stop buy order which says that buy if price goes above this rate, and you buy it. Boom, it goes higher, higher. Oh, $14,000, $19,000. This is near the highest point. Boom, down, and it's sell. It's sell, it's telling you to get out. The point is, look at it further. This is the close. Now this green candle, as I always tell you, the second top. It should have been, if it would have closed right here somewhere, 14,500, I would have been like bullish. But now, it's not. It made this red candle, so making it a double top, and it's now going lower. So, in Bitcoin, I'm not that happy. Neither should you be. But the point is, our plan works. It helps you get in and get out at the right moments. Thank you.